Hi, listener. You are welcome to the continuation of our online tutorial class from your famous student Scott Booster, your online tutorial provider for JAMB, UTME, WAEC, NECO, NAPTEP, exam student. We are continuing from where we stopped on our presentation on accounting subject, and today we shall be taking the fourth lecture on this particular subject. We encourage our listener to endeavor to go back to the previous video, that is our video 1, 2 and 3, where we are trying to lay the foundation of this particular subject. Today we shall be looking at the concept of trial balance, and more specifically we shall consider the type and the treatment of errors, those that affect the trial balance and those that do not affect the trial balance. And at the end of this class also, we focus more on the suspect's account. My name is Mutolib Anifowoshe. As rightly said, the specific aim of this presentation is that the listener or the student should be able to know what trial balance is all about, and also to be able to know the uses and the limitation of the trial balance. Apart from that, we are also expected to be able to identify and explain and also to practicalize the accounting for errors, those that will affect and those that will not affect our trial balance. And having known that, then we should be able to know the extract of a simple trial balance, and at the same time be able to discuss the procedure involved in using suspect's account to account for errors that do affect the trial balance. A trial balance can be defined as a statement of all the balances from ledger. Remember, our ledger is an account. We have sales ledger, purchase ledger, and general ledger, if you can still remember. And then we also have a ledger. In general ledger, we have account of all other items apart from sales and purchases. I think you can remember that in our second presentation we discussed that. So it's a summary or a statement. Please, trial balance is not an account, because examiner usually ask this in the exam, that a trial balance can be defined as an account. No, it's not an account. It's just a mere statement of all the balances from the ledger and cash book. Remember, cash book can serve two purposes. It's a prime book, that is the book of original entry. Also is a ledger, that is an account, and we discussed that in our lecture 3. Now, the concept here is that when we say trial balance, trial means something you want to see whether you can try an error concept, you know. Then the concept is the total balance, the total debit side of an account must equal to the total credit side. So if they are equal, then we said our trial balance is balanced. But if they are not equal, then we said the trial balance is not balanced. So we must know at this point that all the accounts we open, we summarize them, carry their balances into trial balance, and see whether the trial balance will balance or not. Now let's quickly look at a sample out of this trial balance. How does it look like? This is what we mean when we talk about trial balance. We are looking at the summary from the ledger. For example, we have from capital account. Remember, capital, that's the equity ownership or the owner's contribution. It has a credit balance. That is why it's on credit side of trial balance. Your cash and bank, our previous lecture number 3, We discussed this. They are asset and they have debit balance. That is where they are on this side of the account. Your purchase is also an asset. Your inventory, for example, your stock is also having a debit balance. Then the return outward. Remember return outward? That is, whenever you buy something from your customer and there is need for you to return part of it, we call it purchase return. We discussed that also in our second lecture. And it has a credit because it's going out of hand, so it has a credit balance. Then you bring it to the credit side. Then sales. Please, sales here is not the good. Is the goods not the money you received? When you sell product, that product will go out of your hand. Then you represent the monetary value of it in a cash book. Then or in a debtor if they have not paid you. Then the corresponding entry will be on sales volume, on sales account, and the sales itself also have a credit balance. That is why it's on credit side of this particular trial balance. So debtor, somebody owing you money, is your asset, is on debit side. We have return inward, what you return, what you receive from your customer who bought goods from you and return part of it to you. The goods become part of your stock. Then is also a debit balance entry. Remember, drawing is a form of expense. It also have a debit balance. Then wages also is an expense. It also have a debit balance. If you can reflect back to our second presentation, we discussed this. Those accounts that have debit balance and those that have a credit balance. So we were able to know whether an account has a debit or credit balance from having them in a trial balance. In this trial balance, we are lucky the account here is balanced. We have a balanced account here, i.e. the item on the credit side of the trial balance is exactly equal to the amount we have on the credit balance. Then we said this particular trial balance is balanced. Now, if it's not balanced, it's either the debit side is higher than the credit side, or vice versa. So if this thing happen, then there's need for us to kind of find out, to investigate what will have been responsible. It might be maybe we left some item in a ledger we didn't pick, or we pick a wrong item from a ledger, or we post a wrong figure. We shall discuss all this as we move ahead into this presentation. Why do we prepare trial balance? What are the objectives of having trial balance? The trial balance is just for us to check the arithmetic accuracy of our ledger account. That is, when we open all the ledger for purchases, stationery, wages, office expenses, sales, debtor, creditor, we open all the ledgers. We post from January to December. We post from accounting, beginning of accounting year to the end of accounting year. We post into this various account. At the end of the day, before we prepare the final account, we must try as much as possible to see whether we have a mistake in this account or not. So if they don't have to determine or to find out whether we have not commit any arithmetic mistake in those ledger, then we need to provide or to prepare a statement referred to as a trial balance. And so the first thing is that to check the arithmetic accuracy of the ledger account. Not only that, plus the cash book also. Remember, cash book is also a ledger, and the cash book. And remember, cash book is made up of, depend on type, either cash account, cash and bank, cash bank and discount, depend, as we discussed in our lecture number 3. Now it gives material for preparing final account. As I told you, before we go into the final account, we must prepare trial balance, and there is from the trial balance we now prepare our final account. We shall know what we refer to as final account in our subsequent presentation. To have a proof that double entry of each transaction is made. That is, if we have problem with any of the item in a trial balance, the possibility of not following the double entry principle, which is the basis of accounting, will be determined. So it's a proof. It's just for us to see that yes, we have observed the double entry principle, or the entry system we learned. Remember, the double entry principle was proposed by Luca Paciolo in 1494. It's still the same double entry principle we are still using now. And what that principle? The principle states, for every debit entry, there must be corresponding credit entry, or vice versa. So the meaning of this is that if I should put one entry and I didn't take the other entry into consideration, then there will be problem with my trial balance. I can actually go back and trace or kind of check why I have a problem. Now, important point to prepare trial balance, it should be remembered that all the assets, please take note, all the assets, this is very, very important, and the expenses account are always what? A debit. Please, assets and the expenses account has a debit balance, meaning they must be on debit side of a trial balance. If you come back here, you see all the assets and expenses. Look at expenses here. This is wages, drawings and expense. Are we okay? Return inward is an asset. Return the goods returned to us is still part of our goods. Debtor, somebody that owes us money. Are we okay? Postage, when we buy something from supplier, it becomes our asset. Then bank is our asset. Cash is also our asset. They are all on debit side. So bank is an asset, whereas debtor is an asset also. Then the wages and drawing, they are all expenses. So they are on debit side. That is what we need to take note of. Then another thing is all liability and income. All liability and income are always credited. They are on debit. They have a debit balance. Liability and the what? And income or revenue related item, they are on credit balance. Also take note, all provision, by the time we move to the account, provision as defined is the kind of an estimated amount set aside to take care of a future obligation. You can make a provision for something that you think it will happen in the near future. For example, if you think that one of your debtor might not be able to pay you, then you do what we call provision for bad debt, and that is what the accounting concept of realization concept explained to us, or the conservative convention, as we discussed in our first video. Then also take note that our closing stock is never taken into trial balance. Please, if you have any stock in a trial balance, that should be opening stock. We are going to discuss the difference between opening and closing stock subsequently. But any stock you by peradventure see in your trial balance should mean that the stock you have at the beginning of the year. The closing stock, that is the stock left over at the end of the year, should not be taken into the trial balance. So when you know all this, you'll be able to prepare the trial balance, and having been able to explain the objective and the important point to know, does trial balance, does it solve all the problem we have? Does it really solve that there's no mistake has been committed? Let's look at the limitation of the trial balance. Now, trial balance has some limitation, and this limitation is all about by having a trial balance that is balanced has never in any way indicate that error has not been committed. I hope that one is clear to us. It's not a clear-cut concept that once we have a balanced trial balance, that all is well with our accounting entry from the source document to a kind of a book of original entry to the ledger to the journal, and from journal to trial balance. No, because there are some errors that are not necessarily affecting the trial balance, and our trial balance will not be affected however error has been committed. A trial balance that balances does not necessarily prove that all transactions has been recorded. We are going to see why. There are some kind of error that still cause the trial balance to balance and not easily detect. So there are certain things that will happen that even when you commit that particular error, your credit side and debit side of your trial balance will still equal, will still be the same. But yet error has been committed. That is where the main problem is at this point. For example, if you omit entire transaction, it doesn't have a debit and credit. automatically your account will still balance, but you have omitted a very important sales. Of course, we are going to do more of all these as we move ahead. So the most important at this point, please take note, if your trial balance is balanced, that has never in any way indicate that all is well. I hope we got it to this point, and we can easily reflect on what we have discussed so far, so as to be able to lay the foundation on this particular area. Please, trial balance serve as a gap or a bridge between the preliminary bookkeeping and accounting process up to the point of preparing the final stage of the financial statement. Now, from this point, then we move to those mistakes that when we have them, we will not be able, the trial balance will still be balanced. We call them error that do not affect trial balance. Error that do not affect trial balance. Error have been committed, but this error do not necessarily affect our trial balance. Let's look at this error. These are these error. We are told that the following error do not prevent the trial balance from agreeing, i.e., they are errors that do not affect trial balance. That if I commit any of these error, or if I make any of this error in the presence of your kind of posting into ledger and extracting figure from the ledger to trial balance, if I to make this any of this error, then the account with the trial balance will still remain as if nothing has happened. And this is the most difficult aspect of this job, because if I have an error that affects the trial balance, the meaning is I can easily know there is a problem. But if the trial balance and I think this all is well, but indeed a lot of error might be been committed, whereas the error will not be known. So we quickly look at this error one after the other and see what they mean. The first one is error of omission. Number one, error of omission. The error of omission is trying to tell us what are the where the transaction has been completely omitted from the ledger account. That is, the item did not even enter into any ledger at all. For example, if I pay, let's say, wages, if we pay wages to worker with cash, normally I should debit wages account and credit cash account, remember? But if I should maybe I mistakenly kind of omit this particular transaction, it won't affect the wages account. At the same time, it won't affect the cash account. That means that this cash account will be undercast, or let's say overcast, whereas this one will be undercast. With that is the total here will be lower than what is expected, and total here will be higher than what is expected, because my cash is supposed to have reduced by an amount of wages paid, whereas the wages supposed to have also increased form of expenses. So this one, the increment here and the decrease here will automatically neutralize one another, and when I prepare my trial balance, the debit side will be kind of overstated. The other one is also understated. At the end of the day, these things will balance, and I will not have problem. They are all even on the debit side. The one will be understated, the other one will be overstated. That will neutralize the account. So the trial balance will still be balanced, but there is a omission of the salary. Another one is what we refer to as error of commission. Let's continue from here. Error of commission, where one side of transaction has been entered in a wrong account. Error of commission means I've recorded the account. One has been properly recorded, but recorded properly but in a wrong account. When I say properly means that maybe if it's supposed to be a debit, it's I also put in a debit account, but that debit is a wrong account. For example, let's say I will pay wages, and they have already credit cash account, but instead of debit wages, I debit stationery. I debit stationery instead of debit wages. The two of them are expense account. Wages account is expense account. It's supposed to be debited with cash, but I mistakenly debit stationery account. So that's what we call error of commission. Then error of principle. As for error of commission, but the correct and incorrect account are different type. Now here we use this, we use, for example, what we discuss here is that we have two expenses account in form of wages account and stationery account. That is error of commission. But error of principle, it is more or less the same thing with error of commission, but instead of putting the money into another expense account, let's assume that I put the money into asset account. For example, let's say I bought a motor vehicle with check, let's say 2 million. Then there will be bank cash book, bank column, I will say motor vehicle bank. Instead of putting motor vehicle, and I put in motor expenses. So instead of motor vehicle account to increase with 2 million, it's going to be my motor vehicle expense that will be increased. Both the expense and asset account have debit balance, but the problem is the asset account is not the same thing as expense account. So that's what we call error of principle. The principle here is that I'm using a different account, a different kind of account. Asset account is different from expense account. But here, please take note here, because this one are very close. The two error here, they are very close. This one, there's a wrong entry into a similar account, but here the entry is to different account. Then error of original entry. This is number 3. Error, this is number 2. Number 3, error of original entry, where a wrong amount has been used for both debit and credit. Please, the account here is maintained. For example, I pay wages with cash, wages account, I debit it cash, then here is wages, but the amount is 5,000. I put 500, I put 500 here. So 500 or 5,000. The error with the account, with the traveler will still be the same. But for the fact that instead of putting 5,000 into the both account, I put 500, it don't mean that there is an error from the original entry. You used wrong amount for both debit and credit side. Then the next error, that is number 5, reversal of entry, where the debit has been made to account that will have been what? Credited, and vice versa. So for example here, what by error of reversal or reversal of entry is that instead of debiting one account, I credit it, then the other account, instead of crediting it, I debit it. So just like now, let's take our wages and cash. Instead of debiting wages, I came here, I credit it. Instead of crediting cash, then I debit cash account instead of crediting it. So this is the meaning of error of reversal of entry. Then the error of duplication of entry, where transaction has been posted twice. This occur. Let's also take the example of wages. I think that should be okay. I pay cash, then I have a wages. So maybe in February or in June 2016, for example, we pay salary and we recorded the salary correctly, maybe in the middle of the month. At the end of the month, having forgotten that we have done that before, we also now record this second time, meaning that we are doing it twice for the same account. There's no error with the account, there's no error with figure, but the only thing here is that we recorded the money 2 times correctly. So with that, the trial balance will still be the same. Then the last one is error of compensation, where two or more transactions has been entered incorrectly but cancelling each other out. Compensation means that we record the item incorrectly, but this incorrect transaction was done in one account and also done in another account. Incorrect transaction, but one debit side was entered wrongly, the other credit side also enter wrongly. But these are two different transactions now. These are two different transactions. It's different from the original entry. Here, maybe we pay wages, we enter it wrongly. When we also pay for stationery, we also enter it wrongly. By peradventure, the two amounts involved are same. So if the two amounts involved are the same, for the fact that we have rented them incorrectly at their various accounts, we automatically compensate for one another, and the bottom line in the trial balance will still be the same amount. So this is error that do not necessarily affect the agreement of debit and credit side of the trial balance. Let's take note of this. For the WAEC student, examiner on frequent basis asks you to list and explain any of this error. For the JAMB student, examiner come with a figure. We are going to see them as we move ahead in this presentation on how to handle this particular error. Let's look at this one in glance. What we have done here is that all these errors do not affect trial balance. That's where we have this something here. Trial balance still remain equal. It is equal here. There's no problem. So error of commission, error of principal, error of what do you call it, reversal of entry, compensating error, then error of original entry. Please, all these errors do not reveal any problem of the trial balance. Now, we move on to the error that will affect the trial balance. Error that will affect the trial balance. What are those errors that once you commit them, once you make that particular error, your trial balance will not agree? The first one is error of transposition. When you say you transpose, mean there's a mix up here. This is where the wrong sequence of individual character within the number is recorded only in one of the accounts. What I mean by transposition is this. I pay, let's say stationery. I pay for stationery with cash. I have stationery account, I have cash account. When I pay cash, I will put stationery here, remember? Let's say 500 or 560. 560, for example. Let's write it clearly. We have 560. We have 560. Now, the 560 was the exact amount that we pay for stationery account, cash account. So in the stationery account, we put cash as the corresponding account. Then I put 560. So when I come to the cash account, I put stationery and I say 506. That's what we call I've transposed 0 to take position of 6 and 6 taking position of 6 of this in this particular place. If I've done these two correctly, maybe 506 mistakenly, it won't affect trial balance. But for the fact that A is correctly written, the other one is having problem, then we call it error of transposition. And at the end of the day, the difference between this and this figure will outstanding in our trial balance. The other one is single entry. This one is very straightforward. For example, it's common in your exam when you are writing exam and you are under pressure. Instead of you to do double entry principle, you do only one entry principle. Remember one entry principle in our first presentation, we discussed the meaning of single entry principle when you only maintain a one leg of the transaction without recording the second leg. The one you omitted will automatically be there in your trial balance. The credit side will not be equal to debit side. Then posting a correct balance to to the wrong trial balance. For example, you have an opening balance from the bank. Overdraft. Overdraft is a liability to the company. For the fact that it's a bank account does not mean that you are going to put it on the debit side. We will put it on a credit side because an overdraft is liability. So if you put it on debit side, then your account will not also balance. That's the meaning of this. Then casting means adding. When you are adding together your figure, you mistakenly add them together. Some of us, instead of using calculator to confirm our figure, we just look at okay. Or when we are under the pressure, before you know it, instead of pressing 5, you press 7. When you are adding one particular ledger, or instead of pressing 8, you mistakenly press 5, which is under 8 in your calculator arrangement. So with this, that mistake you have made in your casting, in your addition of your ledger, will automatically reflect when you come to trial balance. Then making an error only on one side of the account, that's what we said. You make error in the one side of the account, they automatically affect your trial balance. When you make error in both sides, it won't affect your trial balance because the error has been committed in both sides of the account, but here now you are making error only on the one side of the account. With that, the trial balance will be affected. Then another item is that undercast means when you have overcast, you can also have undercast. Undercast means that instead of pressing 9, you press 6. That's undercasting. Are we okay? Instead of pressing 2005, you press 2000. Instead of adding 2000 plus 3000 plus 4000 to have 9000, you press 2000 plus 3000 plus 1000. You are having 6000. You are doing undercasting. By the time you come to your trial balance, that amount left out when you are doing your addition will also be reflect in your trial balance. Then entry an item more than once only on one side of account. You know, we have seen this one before, that when you enter an item more than once in both sides of the account, there won't be problem. But when you do this with only one account, where the other account is well prepared, then there will be problem of a trial balance will not balance as case may be. Now let's look at this thing, how it look like. What we are saying is that this thing will not balance as compared to what we have here. Here we have this is balanced. With all this error we have committed, your trial balance will still balance. But with the other error you have committed, then the something will not balance. One will be higher than the other. Remember, error of calculation either overcast or undercast. Error of omission, one entry. Are we okay? Posting the wrong side of the account. Then error in form of amount, after in form of the transposition, or twice, or you kind of record a single item twice in one particular account. So this is the errors that will automatically affect the trial balance. So when this error is seen or is observed, then there's a need for us to adjust the trial balance. Make sure that trial balance is balanced before we move ahead to prepare the final account. Because if you continue with this final account, your account at the end of the day will not be balanced. However, by the time we come to the account proper, we will explain, must we balance the account in exam? That's the question we need to ask. Of course, balancing your account in exam does not necessarily mean that you have not committed error. As you know, the trial balance itself that is balanced does not mean that errors have not been committed. I will explain the tips of how to prepare account, and if you have your 99% what do you call it, marks, even when account is not balanced, by the time you come to the way of preparing the account. So the next item we are going to look at briefly is the examiner's tip. If I'm facing this kind of thing in exam, how do I handle them? One, the first thing we must know before you can say either error has been made or not is for you to know what entry has been made. Ask yourself, what entry has been, because examiner will give us a question and they will give us the entry. The entry, this and this and this. But you want to ask yourself, what entry should have been made normally? That is, what's the correct entry? So if you don't know the correct entry, you won't be able to know whether the entry made is correct or not. But that's why I will always encourage us to a kind of listening to our previous video before you come here, because we have explained on how to record our transaction in the various accounts, so as to be able to learn from the a kind of systematic way of this particular class. As I told you previously, we assume a zero knowledge, and that is why we are picking this video in series. So please don't jump any of the series or any of the lectures, so as to be able to maximize your understanding at all the stages of this lecture. Now, once you know what has been made, examiner will automatically give you this in the exam, that now this particular entry has been made, probably in error. Then you need to know what should be the normal entry, then what must be done to correct the error. That is the concept. So this is a tip you must go with. If you don't know what should be the correct entry, then please, if it's a theory, don't attempt that question. If it's a theory, and if it's an OBJ, please come back later. Don't waste your time on it. Not until when you know what ought to have been done. Even if the error has been made and you know there's an error, but you don't even know how to correct it, why wasting your time? So you need to go to the next question so as to be able to do the normal thing. Now let's take little example of this error that do not affect trial balance. We see how we correct it. Basically, as a summary, all the error that do not affect trial balance, what we need to do is to do journal entry. You don't do journal entry to correct them. You journal entry it and you correct it. So I have few of them here in form of illustration. Please, no double entry for transaction that made in a ledger. Sales on credit to, for example, sales on credit to Score Booster for 1,000 was not recorded in the ledger. So you have not recorded it at all in anywhere. What you need to do, just go to the debit this particular debtor and credit your sales. So that's just the whole thing. You go back to ledger, you do it. That will later affect your debtor. You brought Score Booster into your account as a debtor and asset. Then you also increase your sales with that amount of money. So that will be account. That's the error of omission. You omit completely. Commission, an entry is made in a wrong personal account. Please, the personal account is the account of individual. E.g., you bought goods from K. Jima for 2,000, but you recorded in J. Jima account. You know, this is a creditor, K. Jima. Then you put the account in the account of J. Jima. But the fact that they have Jima does not mean that they are correct. So mean that you have a kind of understate one particular debtor and overstate another creditor and understate the other one. So what we need to just do the normal journal, reverse the entry. The JGMA account should be recorded. The first should be the case. You put it in the proper place and you move on with your analysis. Then the error of principle. We have explained the error of principle, a fundamental error where entry is made in the wrong account. That is, for example, here, the purchase of motor vehicle for 25,000 is recorded as a debit to motor vehicle expenses. Expenses has been overstated before. So what do you do to understate expenses? You credit it because it's a debit balance account. So when you credit it, you are trying to reduce it. Your asset is also understated before, then you debit your asset. You can see now what we need to do is that just go to the two accounts you have made a mistake, reverse the entry there in form of journal, then you update your trial balance. Then error of compensating error. Error are made in ledger which cancel each other. For example, business have overcast both purchase and sales with 5,000. You have overstated your sales and purchase. When you remember your sales account has a credit balance and it has been overstated by 5,000. What do you do to reduce it? You debit it. Remember your purchase account has a debit balance and now we are told that it has been overstated by 5,000. Then what do? You credit it to reduce it. So with that, you adjust. This is how we correct this particular error. Another thing we need to take note is the issue of compensating error, the sales account and purchase account. Then we have complete reversal error. So all these are errors that do not really affect trial balance. If they are committed, you have to be very, very vigilant. That is why uh, there should be a kind of internal control, what we call accounting system in a company, where you'll be able to understand what is on what is there. If not, there will be a problem on how to handle most of these error. As I told you, the most difficult aspect of this area is error that do not affect trial balance, because you think all is well when indeed a lot of mistake has been committed, and is unknown to you because your arithmetic accuracy seems to be correct in form of trial balance, whereas you have committed quite a number of error that do not reflect in your trial balance. So you can also look at the compensating error, the compensating error, how we reverse it, order of original entry, how do we reverse it, then a complete reversal error, how do you also adjust it. So the major thing, as I said, is that all these are just journal entry. Take the account involved, reverse the entry. The one that have a debit over debited should be credited. The one that's under credited should be what? Credited. See, these are the things that we need to take note of. Once we know this, we'll be able to feel comfortable when preparing our final account. But if we have problem at this point, then to prepare final account might be a major problem, or even we have final account will be prepared, and remember, the purpose of account is to be able to use it properly for the users. So if there are errors, mistake in the account, right from the source document to journal to ledger, then to trial balance, then the final account itself we automatically have a problem. Now let's look at the what do we have here. These are some of the questions we have from your WAEC, your UTME exam 2011. Examiner give us this question, and we are asked to calculate the total of the trial balance. I think they just want us to know whether we understand the concept of debit, both assets and expenses, then credit, both liability and income. And that's the concept they want to test here. Lighting is an asset. So let me put it here: debit and credit. Lighting, this one, 400 purchase 3,000. Are we okay? Sales 1,002. Creditor 2,250. Debtor 50. So examiner want us to count. This is the account should be balanced. I think they should balance. I have these two. 3, 4, 5, 0. 3, 4, 5, 0. That is my what do you call it? My credit side. What of the debit side? 3,000 plus 400, making 50, 450. So you also 3, 4, 5, 0. So examiner wants us to, once you know what you are doing, just pick any of these sides. You see your option will be given to you. Please, that's just the concept we need to take note of. Then the examiner also asks us, which of the following, 2014 question number 6, which of the following affect the accuracy? Affect the accuracy and the authenticity of trial balance, i.e. that we do not affect, that's the error that will affect the accuracy of trial balance. Error of omission, no. Remember, commission, no. Transposition, yes. You see, these are the things that we need to take note. Now, examiner also asks us if salary account and expense account is debited instead of stationary account. Stationary account is also expense account. The error committed is that of what? Error of commission, omission. Omission means no. Compensation means something happens somewhere. Principle, no. Error of commission. Error of principle and commission are very close. But at the beginning, we are told that if salary account is debited into the motor vehicle account, it will be error of principle. But here now, into the same expense account, there is error of commission. I think we just explained it the other time over there. So let's take note of this. We just pick these 3 questions from your past question. We have quite a number of them. By the time you are doing your revision, you'll be able to know, having followed the lecture we just had now. Now, the error that do affect trial balance. Let's come back to the one that affect trial balance. The error that can that we made, which will result in one side of trial balance being different from the other. That is what we refer to as that particular error. And the accounting equation does not hold true here. There will be problem of accounting. Remember, accounting equation says asset is equal to capital plus liability. So once we have error, then this equation will no longer feasible. So we require an account called a suspense account to correct this. What do you mean by suspense account? It's very simple here. I have my trial balance here. Okay, this is my trial balance. I have probably I have my particular, I have debit, and I have credit. So I will put all the items one after the other, all the items one after the other when I was trying to extract my trial balance. So at the end of the day, I will close this account. I will close this statement. So when I have the total, I discover that this place, let's say credit side is 10,000, and this one is 10,500. Wow, there's a problem. What do I do? The first thing I will do is to take this difference, because now we have this side higher than this side. So I will create a what we call, this difference should be put in a suspense account. Then we open a suspense account immediately. Since this side is higher than this side, I will create another line. I will call it suspense account. I will use it to augment. I will put 500 here. I will okay. And here I will automatically have my 500 here. Suspense account. So from the trial balance. Then in this suspense account, I'm going to hold on to and trying to find out. Why do we call it suspense account? It's because it's not an account. It's just an account for us to hold that discrepancy between those sides temporarily until we are able to resolve where this particular money or a kind of differences are from. So it can be more than, it can be, this 500 can be more than one account, and if you are lucky, it might be from one single account. It can be more than 3, 4, 5 accounts. We have to trace one after the other, probably from source book to journal to ledger. You know, that's why if you have a problem with your source book, source document, to the book of original entry, then from your journal, then to the ledger, then that problem will be there. That is why I said at the beginning, we must be able to be thorough as a bookkeeper, then before you now take it to accounting for accounting purpose. So the reason why we call it suspense is not an account itself, and it's just a temporary record to be able to accommodate the differences between the two sides of this particular item. So for us to be able, it's from there now we now be looking at it. Probably maybe as we move on, we discover that 100 naira from this amount is from wages. Then we take care of wages 100. That means that we are now looking for 400. 50 naira mistake we have here is from stationery. Then 50 naira has also gone. We have 350 left. So is this account that will help us now to be addressing where the mistake is gradually one after the other until when we are able to correct the whole of the whole money. Because before we proceed, we must identify where the error came from. That's only when we can prepare a final account that is okay. Now if the trial balance does not agree, then suspense account should open for the differences. That's what we have just said. The trial balance will now be equal. It will equal technically, but there's a mistake. The error must be found. It's a must and corrected through a suspense account. As I said, the meaning here is that we have overstated or understated. Depends on what we are trying to do. It depends, but at least by the time you are trying to resolve the mistake, you know whether it has been overstatement or understatement. And it's possible if along the way there are over and under, but at the end of the day, it resulted into 500 naira difference. Now the balance on the suspense account must be clear. Yes, there's no account called suspense account on its own. You can't go to account and say suspense account in your main account. No, you must make sure that you find out these 500 naira differences and trying to eliminate them, adjust them, let them reflect, let them go to a proper ledger they belong That is what we are trying to say. Let's take this example. For example, now we have a trial balance here, and debit side of the trial balance has amount of 50,000, where credit side have amount of 49,000, meaning we have 1,000 difference. What you do immediately is to open a suspect account, and we have this amount. Are we okay? Now we now discover, maybe when you are now trying to review your source document and the ledger and the book of original entry, we discover that motor vehicle expenses has been debited to motor vehicle account. Remember, this error occur. The expenses have been debited to motor vehicle expenses, but no credit entry has been made in cash book. Single entry has occurred. It's the motor vehicle expenses, and it has been taken care of a debit side, but corresponding credit side has been omitted in a cash book. What happened to your cash book? Cash book has overstated. So immediately what to do is to come here. You have your cash book account already, you have put the money here, then you come here, you say suspense account 1,000, then you, in a personal account, double entry principle will be completed, you say cash book 1,000. So this and this will automatically neutralize this. So that's the way you correct it. Please take note. This way you correct it, you go back and credit your cash book and debit your social account. When you do that, already this is from a trial balance. Take note, this one trial balance already, that's a different in trial balance, so that will be okay. So if you do that, what will happen to your cash book originally is that when you now go to trial balance, your cash book now will have reduced by 10,000, then that will have make the account to be balanced. Now we continue like that. Another one is that only one entry is made in a ledger. Automatically you take note of that. An income transaction could be recorded as an expense, or expense recorded as an income transaction. So once you know what we are trying to discuss here, these are the area where you need to focus more on and be able to correct your account. What I will encourage us to do is that before you can be very good in accounting, you must know how to play with your ledger account. That is how to debit and credit. What are the accounts involved in this? Even when you are doing the final account, also you need to know more of this. So this is what we have been able to explain to you in this presentation. We have quite a number of past questions we have given to you here, and this one is UTME M6 2008 number 5 question. Examiner give us, and we have to calculate the total of trial balance. I think we tried this kind of exam previously. You can look at it yourself. The concept here, as I told you last time, is a concept of which account should be debited, which one should be credited. When you do that, you're able to know the balance in the trial balance. Then in question number another question here on which year? 2011 question. Also in the trial balance, income and liability are what? I think you know that income and liability in the trial balance are either debited or credited. We discussed that they are credited, where asset and expense are debited. This question was also asked in June in the JAM 2011, question number 3. So the next question also from your JAM question is also on this particular area, and is 2011. The examiner asked us the medium of correcting error whose difference are shown in the trial balance is by use of what? Suspense account. You can see suspense account is here written boldly, option number C. So you can go through the other question, which I believe we have taken care of them for you. Please go through the question. If you have any problem, you let us know, and you follow us through our WhatsApp group that you already have the number with you. And if you don't have the WhatsApp group with you, you can easily visit our website at www.scoreboosterproject.com to register your number and follow the group. For the YX student in 2010, question number 3, examiner asked us to explain the 3 difference between trial balance and balance sheet. Of course, we have not come to the balance sheet, but at least we can look at this question. These particular items, they look alike, they more or less have the same purpose, but this one is talking about financial position of the company. That is the company assets and liability, but here it's just talking about entrance from the ledger. You can read through all this. We still come to this question later on when we are dealing with balance sheet. I'll just put it here so that we can appreciate this. We also have difference, similarity between these two. The both of them are statement. Remember, balance sheet is not an account. Likewise, a trial balance is also not an account also. The head of the two need to be identical, and the consideration of real, personal and nominal account. We shall discuss more of that by the time we come to the balance sheet properly. Then in another question, examiner also asks us that the agreement of trial balance does not necessarily mean that the ledger entry are absolutely correct. I think that's a very good statement, and there is a leading statement. Examiner now says state 5 error that justify this statement and explain 3. We have discussed them. We have 7 of them. Error of omission, commission, principal, original entry, error of compensation, the error of reversal of entry. We have to explain this. We can explain them, even put example there. Then explain situation where explain that the situation that you require an accountant to raise suspect account. Suspect account will only be raised when there is error that do affect the trial balance. So that is exactly what we need to take note of, and we have solution for you here, which you can also go through and take note for your purpose of exam. Now let's summarize what we have done so far. Remember, in our second presentation we talked about double entry principle, and we said double entry principle is based on 3 concepts. Entity concept, that is separate entity. Record from the meaning is record from business point of view, that is we should separate the ownership from the business. Remember, we talk about dual concept where we talk about ledger accounting, debit and credit. That's the Luca Paciolo concept. Then also about accounting equation also be explained. So we have done the first layer, we are through with the second layer, we are doing with third layer. Now we have now closed all the ledger and even know how to extract trial balance, and now we even know how to adjust in case the trial balance is not balanced, or even if it's balanced, if there's error. Then that is the foundation of the account. Going forward, we shall be now considering the concept of financial statement, what we call final account. And to start with, we will start with the simplest form of business organization, that is sole proprietorship, in our next video. So we urge you to watch out for this, as we are going to focus more on this. And also we also encourage you to subscribe to our YouTube channel, like and share our video with your colleagues. Thank you for your time.